Okay, today is Monday, July 24th, 2017. And we need to check the charts. First things first, it is an hour after the opening of the equities market. Okay, looks to me like we've got a long inventory overnight on the oil. Okay, and gonna mark off the high there on the oil. Gonna mark off the low. Okay, it looks like to me we have a swing down right here, opening, swing down, opening, swing high. I'm not paying attention to what I'm choosing for the background. Anyway, so guess you get some rejection right there at the open swing high. Looks like double rejection, in fact. You'd call this area right here that would be your support. Okay, so I guess let's see here. Yeah, this right here would be support. Okay, so basically what happened here is you've got some bulls here from overnight. They didn't have a full position yet. They were interested here. Sellers were interested on top. They're working up there. Sellers got back involved over here. Basically, I'm just looking for basically a volley here. I'm just thinking that the higher this thing gets, the more bears are going to be joining the participation. Basically, though, it's pretty simple. We bounced off down here. Obviously we got up here to the overnight highs, and then we got this quick wick right here. What that means is that it was quickly rejected. That's what the wick means. That's what the tail means also when it's a long tail. Now if it's a short tail, it's not a big tail, so therefore it's not significant. But this is a fairly long quick wick, right? Wick like the candle, and so automatically we were looking for rejection right there, but because of the overnight buying here. Okay, so they're kind of saving this. They're actually looking for lower prices. Okay, so there's some of that volley. I think that at a certain point they're going to get worn out. This right here, you don't know it until it proves it, though. Okay, so figure that. And if you're investing on it, then invest accordingly. I prefer to invest more on solid information like the chart has proven itself, or the crowd. I call the market the crowd. The crowd has proven itself. If the crowd has not proven itself, but I'm suspecting that it's about to do such and such, then I keep the trade very small. It appears there's no data on one of my platforms here, so I'm gonna have to update the contract here. This could take just a second. Sorry about that. I could trade without it though, and that's what I should be doing. Sorry. Next time, I'll wait until after the show. There we go. Alright, so basically on this one right here, I would be looking for... Actually, I'm looking for a neutral position here. Perhaps we get a breakout here, and this has got to be a good performance right here for a breakout up there. But if anything, I wouldn't short this until it got down here to the open low, and then it started breaking, or basically it breaks below it, comes back up, bounces, and then breaks down. That's about it, and I don't have any high hopes on that, mainly because we've got a lot of long inventory here. So basically what I'm thinking is that we've got a lot of we've got some buyers here that are trying to put in positions. That's why we have a bounce here and a bounce here, and basically we haven't touched the open swing low here. So all of this is all very predictable, to be expected. The thing is though is that we're getting hit right up here which is an indication of the overall macro picture. Okay, it's to be expected, but that don't mean that it can't break out. There may be enough bulls here to go ahead and keep on pushing. And if they can push through here, it could be a good breakout there, because it could catch a lot of bears off. But I'm kind of thinking that this is actually overall sentiment right here. Any position that gets pushed up here is just going to give bears more ground. You know, bears look for higher prices. So if these guys give them higher prices, they're going to reject it. So it's kind of an iffy situation there. I'd be more prone to short the market, to tell you the truth. But we've got a long inventory here, so I'm not really sure when these bulls are going to get out. So that's to be seen. Okay, I've got the next chart coming up. Let's take a look at the obvious, the NASDAQ. Okay, let's see here. We've got, looks like a neutral overnight. Well, yeah, neutral overnight. Looks kind of like a neutral morning too. Mondays and Tuesdays are basically the mutual funds buying or selling. Normally they're just buying. I mean, mutual funds don't do anything else except for buy until it's a bear market. So it's not a bear market yet. Alright, so I'm gonna mark off this overnight low. I'm gonna call this one the overnight high rather than this one over here. Okay, this is the open, well, yeah, this is the open swing high, I mean low, and this one is the, wow, this one's kind of iffy, right? I'll go with this one. I'm gonna go with this one because it could be this one, right? This could be the open swing high, but I'm going with this one. This one seems more like a sure thing. I've got reasons for that. I think I'll explain that in future videos. But basically, crowd, you know, it's just like common sense of the crowd. Common sense of the crowd would just say, well, we got, you know, 5, 10, 15, 20, 25, 30 minutes in here, and it swung up here and then it fell down here, right? That one's probably more like the swing high. I mean, it bounced off this area many times. Okay, so that one's talking like the swing high. This, you know, the first 3 bars of the open are so volatility. There's so much volatility in the first 3 bars in the open that it's really hard to tell or get a reliable read on those. It's kind of like an economic report, like a big economic report that hits the charts. Those first, you know, those first 3 bars after that are really wild, and then it starts to tell you a clearer picture. So you basically just have to eliminate those bars. But if you've got a trend, like for instance, the market opens and then trends higher, then you could just consider the open swing low one of those bars, right? So there, you know, you do it like that sometimes. Consider these, like for instance, this is the open swing low, right? I mean, what else can it be? It can't be this. So maybe it's kind of an art to be able to understand which one's the open swing high and which one's the open swing low. I think that if you watch this enough or watch enough of my videos, eventually it starts to sink in. You get the concept of it, but basically, the thing about it all is that the thing about all of this is that I lost my concentration. Yeah. I canceled that music this morning. Okay. So basically, the thing about it all is that, got a really dry mouth too. This is all a crowd. Okay, a lot of people consider it like, okay, it's the market. Okay, well, the market is basically, supply and demand. You got markets like when you go to like the Pawn Stars, the show where they have people coming in to trade or pawn things off for money, or they're trying to buy something. Normally they're trying to pawn off something, but it doesn't matter. It's both sides of the deal. So basically that pawn store is basically one of these domes, right? And so, customers are on one side, and then the clerks are on the other side, or the stores on the other side, or vice versa. Okay. And so that, yeah, vice versa. That can be possible. And so the thing is, though, is that that's a one-on-one situation. But if you consider that situation all combined throughout the year, and then perhaps consider like all pawn stores, okay, throughout the whole year, then you can see a kind of a liquid market there, right? That kind of makes sense. That's what's going on here. The thing is, though, is what I'm trying to point out is that the market here is a crowd of people. There's literally a crowd of people. There's some automated systems, but it's still governed, it's still represented by the human beings. So it's not just machines, it's actually people's choices, and there's a lot of them in there. Okay, not necessarily just machines, but there's a lot of people in there, so when you read things on these charts, you need to read them, especially during the liquid times of the day. Read them like they are crowds, right? And so what you've got to realize is that these crowds are watching these markets to make money. Okay, so if you don't see the Q on the chart and the crowd does, then you're kind of out. You're not on the inside, you're on the outside. It would be kind of like if you were in a symphony orchestra and the song started taking off in a new direction, but then all of a sudden you don't know which way it went. So then you've got to sit out. If you don't know the next measure of the song, you need to sit out, because if you start trying to trade that without knowing, then you're just guessing. You're not even investing. I mean, think about it. Every time you play your instrument in the symphony, you're investing, right? Because your reputation is on the line. If you play even a single note out of context with the rest of the symphony, you've just blown your cover. I mean, from then on, they're gonna know that you're not worth investing in. So your time is worth nothing to them, right? So you can't even sell your expertise or what you've invested, which could be your whole life, you know. And so then you can also have a bad reputation. But the thing is, though, is that what you do is you wait until the measure's over, so just to be sure that you're on, you know, on the right path in the right song, and then you jump in, okay. And once you know what the song is, where it's going, okay, so that way you're on, and maybe you act like you're playing, but you're not really playing until you know where the song's going, okay. But this is not a symphony orchestra, so basically, if you miss the cue, okay, therefore you don't know exactly where the crowd is going here, but they all caught the cue, so they all know where things are going. Then basically, um, then basically, you've got to sit out. You got to wait until you know exactly where it's going. Okay. Alright, so then we're over here on this. This is the 6E. Some people are saying that this thing is still bullish. Has been very bullish recently. The dollar has been very bearish recently. This does appear to be a decent double bottom here. I would guess that this would be the resistance line, so it's got to bounce over that if it's going to go anywhere. Although this volume bar right here, basically volume went up and then came down. Well, there's a lot of bears in this thing, I imagine, with that much volume there. This is really an area of battle right here. You can see that the volume bars are very high. This one right here is an unchanged bar, or a doji bar. Almost the most volume for the day in that bar alone. So, you know, and this is down here at this bottom area. Sellers are really trying to pile up there, but buyers are still wanting. I would say that this is probably going to be bullish. I'm going to go ahead and set this chart up for that. So I've got an order on there on the 6E. That's the euro, okay. And let's put this one back up there. Alright, so gold. Overnight looks to me, it's fairly neutral Monday. Okay, we get a rejection at the top there with the quick wick. So I would call that the open swing high. And I would call this the open swing low. Let's see here. Okay, so right here, basically what you've got is they tried to break out here, couldn't, was rejected. There's your quick wick right there. Okay, fell on down, and then basically off the bottom of this one right here, okay, we're bouncing off resistance. Finally, it breaks down lower, and this turns into support right here. Tentatively, this was expected to bounce off here and test lower. Instead, doesn't quite make it down to support here. Tries once, okay, very quickly. Tries again, rejects it, and then basically breaks out, right? Breaks out. So if you were watching this, this was a pretty good trade right here, okay? Technically, this could have been like your cup. This is not a very good cup and handle thing right here. Like, this would have been your handle. This is more of a, I don't know, just kind of an easy pick. You've got the floor right here. You've got rejection right there on that quick tail. And then you see it a second time. Okay. Well, after that second time right there, this trade is money. Right? Basically, when this bar closes, okay, and you see that it's another bull bar, and then you've got another bull bar that is actually moving up right there. This trade, like right here, you need to be trading that. Okay. Now this is the gold. So get a breakout right there, probably 56.80. I would say on up to somewhere like 57.80 perhaps. So it's a buck. So basically about, you know, I mean, 5 minutes is a long time to wait for these bars sometimes. But perhaps about 70 or $100 per contract right there. Okay. And then you just wait and see, you know, how's it gonna treat things, because what you're doing here is you're grabbing that breakout and then you're sitting back. Okay, this is what I recommend. Okay, you can do it how you want to. You can add anything to your your trading strategy, but basically, you know, the surest trade is that breakout right there. If you see it setting up down here, or vice versa, you see it setting up at the top, like this one right here, you could see that one setting up. You could even see this one setting up, right? Okay, because it couldn't break out, you know, and this one was rejected up here. I mean, that's a big rejection right there. And then what do you got? You got, right? So basically what you would be doing is you'd be looking for a breakout right through here. Once you saw that coming through, boom, you get triggered right there, and you get a trade right there. Maybe you don't grab it right away, right? Now, how many bucks is that? That's 50 to... So there's 50 cents right there, right? That's 50 a contract. Okay, that's what you want. That's fine. Yeah, grab that. Now, if you don't get it, you think, oh, well, I was waiting for 70 or 100. Well, then it gives you another try, right? And it actually gives you... gives you 10 more cents there, okay, on that try, and then gives you another try, right? And technically you could be trading all this with an opposite trade. There's a way to do that, so that way you've got one trade on one side and then another trade on the other side, okay. So basically, yeah, you might consider this your you probably consider this your floor right there. So then you break through there. Now it actually flew back up. So you're seeing some bulls are in there somewhere, somehow. Okay. So maybe you lose that trade right there. But then it breaks on through, and then it breaks through here. So you've got to get that trade in order to pay off that little loss there, because it did fly back on you. That's what this is, that quick tail right there. Okay. I can see somebody losing that trade fairly easily. And then we fall on through here. Well, this is 56, 50, 55, 40. Okay, 60, 50. It's 110 basically, yeah, 110 cents. Basically, that's 110 bucks per contract. So you could grab a piece out of that, 50, 70, 100, easy. Okay, and then just give it a break and see. You don't. I mean, this thing could keep on streaking down. And there's a way to trade that if it is very volatile, and perhaps it's going on and on and on. Basically, what you do is you just set your trigger a few ticks out of the range here, and basically what happens is that if this thing is really volatile and it wants to keep on selling, you know how that is, right? So basically, the thing will trigger you in. Then keep going, and just say that, okay, well, I'm only going to give up 4 ticks. That's it, right? 4 or 5 or 6 or whatever the case is. If you're on the 6E, perhaps you give up more because if you're on the 6E, perhaps you give up more because, well, the loss per tick on there is pretty darn small. Okay. Okay, so this is a little breakout. Basically, what I'm doing is I'm going to look for a little bounce here. I guess I could sell that right there. Now, if you take a look here, you can see there's liquidity right there. Okay, so the offers are stacked up high there. Also, sellers came down here and got this liquidity. So that kind of means that there's a lot of buyback here. Okay, so not as many sellers needing to buy back in the market. Therefore, it could possibly be hard to keep the market selling off. Possibly. Sorry, I'm keeping an eye on these other trades. Okay, I need to... Okay, yeah, that oil market, it did provide. Okay, we saw the rejection right here. We did get the the higher low here. Okay. Well. Okay. So basically, if this was going to sell off, right, it doesn't break resistance, but instead it broke resistance. It gave you a buying opportunity here. Can buy that. I'm looking at all these markets instead of just focusing on one, so you know it's my loss. In fact, that 6E trade had come and gone already. In fact, and it actually rose up quite a bit and then it fell back down, so I didn't get the trade in. I didn't get to pull it out. I think I'm gonna have to pull the thing out here. Might as well. I don't know where it's going now. So now this thing may continue to staircase up there, and if it does, what it means basically is there's a big buy program that's going to keep on pushing this up there. And so if it really proves it, that buy program is here to stay, and it's becoming that time of day that most traders are taking off anyway, then this thing will continue to buy into their stops. They got stops up here. Now obviously the stops ain't that bad, right? Because this is not a real breakout here. I mean, it failed, right? So what it means is that it's not really stops up here, it's actually sell orders. Now that's sell, so meaning that bears are not getting out up here and then buying to cover, right? So like, it's not like it's not like bears had their stops here, their stop losses here, and then the price is going to go up there and hit that and then sell off more. Not at all. Instead, they're actually adding more. Right? That's what happened up here. They just added more sells here. Okay. But this is, this is like heavy liquidity time of day right here. So it may be possible that price gets back up here, and then Viola, what they'll wind up doing is this slow program here eventually just goes ahead and continues to push up, and so then probably that's going to make bears go, okay, wait, let's get out of this position, let them push it up for us, and then we'll sell up higher at a better price, right? It's the basic concept. Or let's not add to this short position, let's add to the short position and then average in at a better price up higher. Okay, so I'm interested to see what's going on there. Basically, this price has continuously knocked, right up here on the resistance. So it's very tenacious. They're very tenacious. That looks like a bull to me. So I'm going to go ahead and buy that market. And then I need to take a look at this NASDAQ again. Alright, so basically price runs up here, bounces off this thing, it's trying. Finally they let it give up. This is a very sleepy market right here. So basically price is just not getting all the way back up there. It makes a new lower high. Okay, so basically that is a new lower high. This is trending down, and you get a double bottom here. Basically the trade's right here. Okay, on the NASDAQ. The S&P 500 E-mini looks basically the same. Basically, it looks like there's some buyers that do want in, right? I mean, you can see right here, you can see right here, you can see at the bottoms here, these quick tails say that buyers want in. The same is true on the S&P 500. It's the exact same thing. But my money is going on the short side. Oh, gotta get that real quick. Oh, there it is. Okay. In fact, need to get this. Here we go. So basically I'm going to go ahead and short the ES. Now this could get wild here, but okay. So you see this quick tail right here. Okay, that means that the bulls are hitting real hard down here. Okay, might get blown out of here, but I'm assuming that the market is not overly bullish here, and that we'll go ahead and test down here on this low. It's just an assumption. I could be wrong. And you know, I'm referencing the S&P 500 E-mini at the same time. So So as you can see, basically price went back up here to support, right? And then now it's failing. Okay. So we'll see. But basically, I said support. What I meant was resistance. This is the resistance line right there, right? So there was that double bottom. Boom. Boom. Actually, boom, boom. Lots of booming here. Okay. So if this thing breaks out over resistance, then you know, this is a real bad trade. Basically, once you break through that resistance or support, okay, then you don't know. Technically, you don't know which way the trade is going. I mean, this is trending down according to this chart. We're broken through the 34 EMA here. We're broken through the VWAP. Okay, now the VWAP is something else, but basically we're broken through 34 EMA, trending down. We're basically rejecting the overnight high and the swing high a few times here. Look at that, knocking on that door several times. Okay, and so everything looks fairly bearish. But the thing is, though, is if this price breaks out right here through resistance, then all this stuff, you kind of keep it in the back of your head. But basically, if the price rejects all this stuff, okay, then all this stuff is not right. It's not telling you the full message here. There's something else new going on here, okay? And so just get out and get ready to find out what it is. Now maybe it continues down again, right? It starts to trend down again, perhaps, but you don't know. It's already broken out up here. It's got to prove itself now in order to get your trust. And do you know what? That's basically the situation or the story with everybody else. Okay. Basically, if it breaks out here, all this stuff is a lie. To the crowd, that's a foul on the play. Okay, foul. So until that price gets the trust back, then basically you don't have the team pushing the chart for you, right? Okay, so you got to know when the team says it's not worth any money, I'm out, until it's worth money. Well, it looks like oil is about to break out. I think it's about to break out there at the top. I'll tell you what, though. It could be that time of day where, you know, the volume's gone and there's just not enough participation to push it all the way up there. Could be one of those days. Okay, now normally this is bad news right here, right? You've got two quick tails like this, okay? That's pretty negative. This could be a complete reversal, and it can be getting expensive. This is the thing, though. We had the exact same thing right here happen, and then we had all of this, right? So basically it's a very choppy market right here. So I'm not going to say, yeah, this is over. I'm going to say this is over if we start looking up here, and then I'm going to look for it to look back down again, actually. Okay. But if it shows me something else, like it starts, basically it pops up here and then it bounces. It starts walking on this support line at that time. This would be support. Walking on it and then bouncing back up and giving me higher lows and that kind of thing, then obviously it's an investment. Okay, there we go. So see, I'm noticing things right here, right? The higher low right there. See that? What is that about? It's a few ticks higher, right? This one is higher than that one. Okay. Which basically says that price is rejecting those ticks right there. So basically, selling has gone short enough that they can't even get these sold to make money down here. That's what a higher low means. Okay, so if I take a look here on my my heat map, right? This is the dome for the NASDAQ. Okay, basically what I've got here is I've got a lot of selling right down into that low right there. Okay, and then it's very weak up here, so it suggests selling can continue here. Okay, it does. The market is saying that there is high liquidity down here, but the thing is though is that this appears to be a fake here, in that they're trying to put this on. This is a spoof in order to push price up, so that they can accumulate more short shares and then continue on down, or just continue to sell out at higher prices, right? Because bears are looking for higher prices. So one of the tricks that they do to fill in those big orders is basically to put these things on, right? Now that's not 100% for sure. This could be real, genuine buyers down here, and they may be looking for those lower prices, right? Because basically we hit them right there. I think looks like it. We hit them right there. Okay. When we were coming down here, they put that there, and then it bounced back up, right? But when market was going away, it disappeared. Okay. Then basically it reappeared over here as market was coming back down to it. But I don't know. If market gets closer to it, will it stay on or will it disappear? So then, now keep in mind that this heat map is basically a tick, like a tick chart. It's not a Renko chart, different thing. This is basically a tick chart, so it's like a second chart. So every second it shows me where the price went, rather than, you know, in 5-minute bars. But we read the 5-minute bars because that's basically the music sheet for most people, the most people. Okay, so that's what you got to stay in touch with. But I look inside those bars and I see what kind of activity is going on in there. And basically we got this, look, we've got lower highs here, so it's trending down. So we're going to look for a repeat of this move right here. See how it was running up, then it was rejected. So I'm looking for a repeat of that. Now if it doesn't happen and it starts to break out here, basically what we've got is we're going to start to make higher lows. Okay, so then I'm on the wrong side. I'm actually not liking this market here today. It's very awkward and contrary.
In the Ever Oasis game, you can be the chief of your very own oasis and grow it into a
Yeah, if this thing breaks through here, then basically they're rejecting everything down here, at least for a tentative time. This could be in effect, so I need to throw that trade off. That was a really bad trade, so and I guess go ahead. But see there, it's not even, well, is it gonna actually break out? I don't know. That's what it's looking like it's gonna do on the heat map up there. So it's having even a hard time breaking through this, which is a very odd market. So basically I'm going to go ahead and pull this S&P 500 E-mini trade out too. Now, if it starts to cooperate, then I know, right? So I need to draw in the this support. Okay, so in this case, we've got a breakout here, which signals that there's a reverse. Okay. Given how the crowd acted all throughout here, not really bullish on this, and it's already, it's already halfway through the day. Okay, so I'm actually expecting a bounce right here, and then either it actually rejects that and continues on down, right, just to follow the trend here, or it bounces right here. So this whole area right here is going to indicate what the message is. Okay. See there? Okay, so we're gonna get that either the bounce or will break right back through. So this is basically what's happening on the ES, the S&P 500 E-mini. This is a really bad trading day, to be honest with you. It's just not a straightforward trading day. I mean, it does seem like there's like there's not a lot of participation from your basic day traders and pit traders or floor traders. Your basic, the crowd, the team, it doesn't seem like it's here. Or it's not all on the same page or something. So, and that's how it is. Basically, you've just got to try to make it as cheap as possible. Because what are you going to get? Basically, it's kind of like it's mental haze. And if there's not a clear message, right? Oh, it's a bullish day. Oh, it's a bearish day. Then what you'll wind up trying to do is you'll wind up trying to trade it when it says bullish. But it's not clear, so you'll always be on the wrong side of the trade. Okay, and that's going to happen from time to time. But what you've got to do is you've got to say, okay, well, this is how much I can lose on it, and that's it. Because basically, if the market's not acting right, look, it's got to act right. Otherwise, there's no business in this market. It would just kill the business in the market, right? So it has to act right, at least the majority of the time. Okay? But once in a while, it's not going to act right. And so you don't know it's going to act right until you've lost it and you've seen how it starts to behave. Okay? For instance, have you ever known something and then like later on in your life, years later, you learned that you didn't know it? It was something else, in fact, and now you understand it completely, right? It's kind of like that on these bad days where you think you know, but you don't know. And so in that case, what you've got to do is you've got to give yourself a limit so that you don't keep trading it, because if it's one of those days and you keep on trading it, you're going to just keep on losing on that day. So come back the next day, make it up, do better than that, and it should start to work out for the rest of the week, the rest of the month. It might be a 2-day bad spell, but basically the way that the team is, the crowd underneath this thing, is that they're not going to let it be like a bad market, right? A bad market is the charts are not real clear. That's a bad market. Okay. Pish posh, choppy, messy, takes a long time to make any money. Okay, the team is just not gonna let that happen. You know, it's people that have been trading these things, these particular markets, for a long time. And they're not going away. I mean, this is their market. It's been their market a long time. Okay, so I don't know what's going on here. Maybe it's the algorithms that are gaming this thing, and that very well could be a possibility. Or there's just not a lot of participation in the market. You know, it's the summer. It's July. It's July. You know, the Fed's pulling out stimulus, right, or liquidity out of the economy, okay, and thus out of the markets. So sell in May and go away is kind of the old saying, which hasn't been true for the past 8 years since the Fed put in a QE package. So it messed up the whole trend of sell in May and go away, but it's coming back. The thing is, though, it's been pretty good for May and June, in fact, but maybe it's kicking in this month. I don't know. But basically, this is a real funny chart. It's just real funny because, look, this right here, right? Market came up, fell down, then comes back up, and it barely even breaks out here. Bounces all over the place. Trends on down, but it doesn't give you anything clear. It's got quick wicks and quick tails, so it's just, you know, kind of imagine like football player helmets bashing each other, right? It's just head on head. And that is a very unclear market. Normally, when I see that kind of stuff, I don't trade that kind of stuff. Okay, so I invested in it, and I thought I was going to be able to read it. In fact, I wasn't. I was actually more bearish than I should have been, because basically I was given a couple opportunities to actually take a profit here. Right, these ones right here were actually small profits. I could have taken those. So, you know, and I had plenty of opportunity to get out of here at break even or just a tiny little loss. Okay, but I was more bearish than that. So because of this trend here, and I kind of figured that basically on a very consternacious day like this, participants aren't going to stick around much longer, right? So I just figured that we could get this thing to easily push through here. Turns out that I was wrong. So I have lost my limit here for the day. Basically, for these teaching classes, I use 3 contracts. Okay, and that's how I teach with a 3-part account. And my limit is right about 250. I try to keep it down to 250 as far as losses go. Can push it up to 500 if things are looking good and looking just great. But I don't see any opportunity in any of these markets. They're real bad. So it's just a real bad Monday. That's all. And I will be back tomorrow again, around the same time. Good luck.